Government is pushing big on the EV space. In fact, Road Minister Nitin Gadkari recently said that by 2030, the EV market in India will grow to 10 million units annually, and the total EV market is expected to reach $266 billion. We're now joined by Sunil Bohra, the Group Chief Financial Officer and Chief Executive Officer at Minda. They have a presence in the two-wheeler EV market. We are, of course, going to talk about the opportunity in the EV space for the company, their business outlook as well. Sunil, thanks a lot for joining in. Appreciate your thoughts here. You know, there is a big focus on EVs now, as we just referred to those comments from Nitin Gadkari. Your own sales to two-wheeler EVs has now picked up to about 12% of your domestic two-wheeler, OEM revenues. I want to understand what is the latest in terms of the EV order book for you. What kind of growth are you looking at, and what would the eventual contribution be of overall EVs to your, entire order book?
Yeah, thanks, Sonia. As you rightly mentioned, we have been front runner in building our EV portfolio in terms of the components which all go into EV. We have also actually built a complete EV two-wheeler as a technical demonstrator and an EV three-wheeler, which we demonstrated in the Auto Expo. I think after that, we have seen a lot of traction with our customers, but coming specifically to the numbers you just spoke about, yes, our EV revenues as percentage of our total EV two-wheeler sales has been almost 11-12% and consistently growing. Previous quarter, it was like 7-8%. We have been consistently adding new business, new customers. And I must say that while we have been adding a lot of kit value, our kit value is almost like 3x to our IC engine in terms of EV products. But still market, you appreciate it's an infancy stage, right? So where the market's still developing, there are a lot of imports happening. People are trying to localize. Our customers also are trying to sort of work onto their own strategy as to what will get outsourced, what will get insourced. So there are various moving parts, but overall in terms of profile, in terms of revenue share, as you asked, we are quite bullish that our revenue share consistently we are expecting as EV to total two-wheeler revenue consistently increase. It's not that we are only in two-wheeler, three-wheeler, but the kind of profile we have built into two-wheeler and three-wheeler EV is definitely unparalleled. We are also working on a lot of our products for four-wheeler EV, which definitely we will come out in due course. But we already have been securing some of the businesses for EV components for four-wheeler as well. So overall,
just a couple of follow-up questions. So when you say that the revenue contribution will increase from this 11 to 12% currently, what are you looking at, say, by the end of FY24 and FY25? And also, you said the kit value in EV products is 3 times higher than IC engines. What is the kit value now? What's the absolute number in EV products, and how much do you think you can take it up to?
Yeah. So in terms of kit value, our current kit value for, say, IC engine base 100cc model normally is something around 10,000 rupees. And if you see all of our products actually are agnostic to ICE or EV. So all the products like switches, lamps, wheels, etc., everything goes into IC also and EV also. So on top of it, we have built our EV products kit value, which is almost like 35,000 rupees in total. So it goes from 10,000 rupees to almost 35,000 rupees per vehicle, which is either already in production, part of it, and part is going into SOP in the current year. So overall, the kit value for EV two-wheeler is something going to be 35,000 rupees per vehicle.
Sunil, it's always good to speak with you. Good morning, Prashant here. And we'll come back to, and good to get those updates, and we'll come back to that in just a bit. But something I wanted to address here and now, there is this, strike going on in the US, right, which has just started, which is, I think, 4 or 5 days old. There are 3 large automakers involved here. There is GM, there is Ford, there is Stellantis. And together they're about 42% of the market, the US auto market. If this goes on, as many are fearing, will this have any impact on your business?
So as of now, Prashant, our exports to US is primarily into the two-wheeler segment and the CV segment. We do have a plant in Mexico, which does serve some of our PV customers, but it's a very, very small business, just a horn business. So if you see from the exposure perspective, we have nothing of any significant exposure to PV segment of US. Our primary exposure is into two-wheeler and CV market.
Is there, if this were to spread, since this is the auto workers' strike, to other plants as well, and on the two-wheeler side, do you see that? Do you foresee that? Any insights there, if at all? And what is the US two-wheeler exposure, directly and indirectly, for you?
Yeah. So very difficult to say how it will expand, whether it will not touch the other segments. But as of now, our US exposure from the total revenue perspective is something around 3 to 4% of our top line.
Got it. All right. Hi, Mr. Bohra. Good morning, and thanks so much for speaking to us here on CNBC-TV18. Quick question. Looking through a brokerage note, and they are estimating that by FY26, your EV revenues could be approximately 1,500 crores. Doable?
By FY20?
26.
24.
26. That's 2 years ahead.
It actually can be significantly higher. So what we have guided for FY26 was 1,500 crore only from one of our JV with Freevo. But overall, if I see the EV segment revenues, it can be significantly higher. It can be north of 2,500 crore also. But absolutely, the big question is how much are the EV volumes one assume. But based on the current assumption we have, we do expect it to grow much more than 1,500 crores in FY26.
Wow, good. Mr. Bohra, normally I have to try to put it tactfully to get that number out of you, but more than 2,500 crores by 2026, that's good news, right? So we'll track that number. But the other factor that I wanted to focus on, besides the operational performance, is the promoter entity, Minda, sold a percent stake in the company in the last 1 month or so. I think the last reported number that he has is close to 22% odd stake is what he has in the company. Does he have plans to sell more? And why did he sell this?
Can't comment on the promoter transaction, honestly, Nigel. It was just a small percent. They were holding 70%, and today they are holding, I think, 69%. So no way there is any significant dilution in the ownership.
Any indication but that they would like to sell some more? After all, it's been a big wealth creator, right? And promoter would have some personal needs or maybe some investments as well they would like to do. So have you heard any kind of inkling from the promoter entity?
Not really.
Okay, so you're saying that no significant dilution in the promoter holding and it stays as of now at this current level. Got that. I wanted to talk a little bit about the castings business as well. 20% of your business comes from there. And within that, in the two-wheeler alloy business, you're seeing incremental volumes from new players. I want to understand what is the order book for two-wheeler alloys currently? What are the incremental orders that you've received? And also you have a new production line, right, at your two-wheeler plant in Supa. When does that come on stream? Once that comes on stream, what kind of growth are you looking at in the castings business?
Yeah. So as of now, our current two-wheeler capacity is roughly 3.5 million to 4 million wheels a year. That depends on weight of the wheel. Primarily, our capacity is defined by the casting or the melting capacity. So on top of it, we are expanding by another 2 million wheels a year, which will be expected to be commissioned within end of this financial year. As of now, if you talk of order book, our order book is almost full. In fact, and that's why we have been expanding. And we have been seeing significant traction from some of our customers. And if we are even working on seeing that whether we will be able to meet all our customers' demand post this expansion. So as of now, the order book is almost full, and we are looking at a significant traction and the positive feedback from our customers in terms of fresh demand.
Okay, so you're saying you're expanding by another 2 million wheels a year, and currently your two-wheeler capacity for wheels is 3.5 to 4 million wheels a year, right? So once this gets commissioned by the end of this financial year, which is FY24, what would that mean in terms of incremental revenues for you? Earlier, you had guided for a 15% overall revenue growth in FY24. Would you want to scale that up? And what about FY25? What kind of growth are we looking at?
No, so growth, normally, Sonia, you appreciate that we say 1.5x of the industry growth is our medium to long-term target. Based on current numbers, what are being guided by the customers, we came to that 12-15% kind of a range, and that is already factored the current expansion, which currently is ongoing and which will get commissioned. In fact, just to tell you, while the plant will get commissioned this year, this ramp-up period actually is like 2 to 3 quarters. So the full impact of that, you will see even a year later.
Okay, all right. And just a quick word on debt as well. Would you look to bring down your debt further anytime soon?
Actually, we are very, very having solid, strong free cash flows, and we have been able to fund all of our capex needs internally. But we have been working to build a significant sort of land bank going future. So we might have to do some short-term leverage here and there, but overall, we are very, very comfortably placed in terms of debt equity at 0.28 net debt to equity. And if you see, our credit rating is actually among the highest in the industry at AA plus level. So we are very, very comfortably placed in terms of our leverage and the funding abilities.
All right, Sunil, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC TV18. Thanks indeed. So that is Minda with some perspective on the business, mostly focused, of course, on the EV side as far as this conversation is concerned.